Hello guys and welcome back to Cryptic Humility. Today we are on episode 19. My name is Vanessa Hurley. I am your host and guide. So excited as always to be here. That is pretty much my slogan for every single podcast episode. And if you were with us last week, we were talking about ETFs. We were talking about what ETFs are. We were going into crypto ETFs, some examples of ETFs you could get involved with. And for a moment, for this podcast episode, I wanted to do a debrief of some of the news and some topics that we'd already have covered because much more has prevailed through these stories and these topics that I want to talk about today. One of those is the Celsius scandal that we covered last week. I told you guys that I would keep you in the loop about what's going on because pretty much the trial was in May of 2025, and if you're watching this right now, it is May of 2025. So the trial came and went, and the sentencing has been finalized. So I wanted to give you guys some updates and also just introduce some more information about the Celsius scandal that I think is important as we continue to fight this battle of scams, fraud schemes, pyramid schemes, etc. Also, today we are going to be covering World Liberty Financial, which we already previously have covered. However, there's been some corrections and some adjustments and also some updates in regards to World Liberty Financial. So I wanted to give you guys some more information around that. Basically, if you've already watched, we're going to be recapping these topics again for anybody who missed them. And they're pretty important news since they're live right now and still unfolding in regards to specific things that we will touch upon today, but that's another one that I really wanted to touch upon. And I will talk to you guys about my trip to New York City again, which happened a couple weeks ago. And there was a company that I saw that is involved in crypto that I want to talk about that I think is relevant and could be of benefit to you. Before we begin, I want to know, how is your Sunday schedule going? Sunday is not so much of a reset day for me like Saturday is. Saturday is my day to clean the entire house, do my laundry, clean my room, do the dishes, mop the floor, clean my car, do everything to reset on Saturday, and then potentially go out on Saturday to hang out with friends, family, etc. Sundays, obviously I work on Sundays. I'm recording the show for you guys today, and that's usually around Sunday nights, but lately me and my partner have been going to church, not every Sunday, but every other Sunday with a couple of our friends. We go out for a ride on the bike if the weather's nice. We come back home, we cook a nice lunch, and we hang out for a little bit until I work. And I just want to say that it has been such a good, peaceful, balanced schedule for me running the nonprofit, which, by the way, the community garden has started, so definitely go check that out. I'll link BFED Foundation again below for you guys to check out our community garden. Things are going well there, but with all juggling everything, it's just so important to find balance. And I see, I know we're getting off topic, but I see so many business owners that are like motivational speakers at the same time saying like, oh, you need to put 100 hours in, you need to slave away for the rest of your life. And while I agree running a business, you definitely need to be working often. You need to be working 7 days a week, but to push this mentality of not achieving balance is something I don't necessarily agree with, because obviously we have one life and I think that you should value it and work hard for what you want, but at the same time, remember to live and enjoy the moment and where you are and not rush the process or worry about the process, because soon you'll eventually reach your desired result. So it's just so important to find balance and make sure you make time for your faith, for exercise, for things you believe in, hobbies, passions, as much as you work hard, a family. Just today's message, I don't know why I feel called to put it out there, is just achieve balance, because you'll be so much happier that way. You'll be so much more motivated to achieve more. And rest does equal productiveness. So don't think that if you rest or you take an hour off, you take a couple hours off from working 7 days a week, that you're not all of a sudden not going to achieve what you want. You absolutely will. So on that note, I'm feeling rested. I'm ready to talk about this episode and these topics. So let's begin. So as I said last week, we talked about the Celsius scandal. There were a couple things that I missed that I feel like we should talk about today. One of those things is that back in 2022, July of 2022, the company Celsius filed for bankruptcy. So, all we've been hearing is that as of lately, the company is finally getting charged, justice is finally being brought to light. However, this has been going on for 3 years. We're gonna recap on everything that happened in Celsius. So, in my last episode, I tagged in the podcast description the justice.gov summary of what happened with Celsius, so you can check that out if you want to read and learn more. I'll post it on the end of this podcast episode too for you guys to see. But what pretty much happened in simple terms is that Celsius was a business startup in crypto. And what they were trying to do is they were trying to take customer funds and have their customers invest in different kinds of crypto portfolios, but also invest in CEL, which is the native token of Celsius. So, why this is important to talk about again is that we try to raise awareness of the scam schemes, fraud schemes, pyramid schemes that are happening in the crypto market. And one of the ways that a lot of new businesses in crypto will get you is by trying to invest in their native token. Now, so Celsius' CEO, Alex, I'm going to add his full name on the screen so I don't butcher it. We know. And he had a lot of people invest in CEL. And what happened is that CEL's price appreciated immensely. And Alex, the CEO, was profiting off of all that money invested into his business's native token. However, once customers started to see that the business model itself for Celsius was not sustainable, meaning that maybe they didn't have other practices in or like how Coinbase might have fees that you have to pay, or even Ethereum and Bitcoin have like gas fees, for example, that keep the business functioning, that keep the blockchain functioning. Celsius' business model did not implement good business behavior, if you will, and they did not have appropriate measures to be taken to help the business model be successful. So they had an illegitimate business model. They were getting customers to invest in their native token. And then once customers were starting to see that their investments weren't really doing well, or things were being shady, or they were some of their funds were being withheld from being withdrawn, that's when things started to turn out for Celsius, which was way back in 2022. So that was something that we missed last week that I feel like is important to mention, that this has been going on for 3 years now. This isn't something that was randomly discovered. This is something that customers have been fighting for a long time, which we're going to talk about some other settlements and lawsuits that happened. Before we do that, though, I am going to make my claim again that this is no different than investing in a meme coin. And this is why I think this way. Because, like I've been saying, if the business model cannot be profitable on its own without investing in its native token, which is sometimes in some ways a direct benefit to the CEO, because they can just, it's like the Hawk Tuah girl. Remember when we were talking about Hawk Tuah girl and we were saying that, she created a meme coin, everybody invested into it, and then she pulled the coin and took all the money. And it's like, so anyways, and then I know there's legal things around that, so it's not exactly that, but investing in a meme coin is simply supply and demand. Investing in a business's native coin in a lot of ways, especially for crypto startups, is simply investing in supply and demand. So my biggest tip of advice would be, if there's no demand in the market for the business model behind, which in this case, Celsius did have a business model of lending and borrowing crypto and stuff, but the actual business model itself and how they achieved that and kept balance financially was obviously illegitimate. So in a lot of ways, you're taking a huge risk on a startup company that doesn't really have any backing behind it, doesn't have any legitimacy behind it. So really, you're investing in this like phantom coin that could depreciate over time. Or, if the company files for bankruptcy, like what just happened, the CEO could be the only one to benefit. There's a lot of things around that, but the most important thing to get out of anything I just said is to be incredibly, incredibly mindful of investing in crypto startups, especially their native token. If you want to invest in the business model, absolutely. But if they're using their native token to fund the whole project, that's your red flag right there. So Celsius was a huge deal because it had over $4.7 billion worth of customer investments. So this is a company that put a lot of people on the line. This is people that didn't just necessarily invest a little here, a little there. Oh, I lost $5,000. Like some people, just like we've seen in other crypto scams, have lost thousands and thousands of dollars trusting in this company. I want to raise more awareness around crypto startups and raise more awareness around the scams and the schemes that happen. And this is a prime example of the scams and schemes. Maybe the reason why we keep falling victim to it is because not enough people talk about it. Not enough people say, hey, watch out, like support this crypto company, but be mindful of these things. Like a lot of people just are looking for the next big thing and see that this could be it and support the vision, dump their money into it, and then how this happens, you know? Especially in crypto. This has been going on over and over and over and over again. You think people would start to pay attention, but simply I think it's because we don't talk about it. We just accept that $1 billion were lost again in crypto and move forward. And I don't think that that's right. It keeps me up at night. Okay, to fact check in the last video that I posted, which was correct, he was sentenced to 12 years in prison and he also pled guilty to 2 counts of fraud. So another piece of information that we forgot is that in raising money for CEL for the native token, he raised around $48 million and he initially benefited $48 million off all the investments and stuff that went to the native token. He was ordered to forfeit that $48 million back to customers. He paid a $50,000 fine and also is still facing issues with specific victims that have fallen into the Celsius scandal. So here's the tea. Some customers before Celsius filed for bankruptcy, so around 30 to 90 days before Celsius filed for bankruptcy, a couple of their customers tried to withdraw their funds. So maybe a couple customers were catching on ahead of time, maybe had connections through the crypto world and were hearing things and also just questioning the business model and how Celsius was functioning, or, you know, not having any awareness of their financial statements and like things that should be obvious and open to the public, especially for crypto startups and stuff. So a couple of the customers were trying to withdraw their funds ahead of time and they were having issues with the CEO and like settlements and lawsuits are happening because the company was in such poor condition. Some of the customers who withdrew all their funds offered to put their funds back into the company to be able to disperse correctly to all the creditors. Some customers were fighting that because they were saying, well, we withdrew our funds 30 days before you filed for bankruptcy and all of this happened. So this was a legit transaction and this is my money, so I should be able to keep it. So those lawsuits and settlements are still happening. And I don't know, what do you guys think? I mean, for me, if I worked with a company and I invested in a company for myself. And, you know, before I found out that a company was bankrupt, I withdrew all my money that I had invested or maybe even profited. The money that I profited, I took it out. You know, what are the chances that I'm then gonna give all of that money back so the government or law and order, whoever's in charge here, can disperse all the money to who it was correctly dispersed to or who it was meant to go to? Not me. I would definitely fight that transaction was legit, especially if I'm making a profit. And honestly, I'm just being honest about that. And I'm sure a lot of people probably agree with me. The whole moral of this story again, and why I'm bringing this up again, is because obviously there were some details that were missed, but also because this is a true sign of a crypto scam. This is what you need to do to avoid crypto scams. And honestly, talking about it again raises even more urgency to pay attention to the signs, be careful about the companies that you invest in. But also, you know, we've already been talking about crypto, especially for ETFs and stuff. So maybe don't go so gun-ho for the crypto startups until you know that they're legit, and pay attention more to how you can, you know, indirectly invest in crypto safely with a little bit of money so you don't lose everything in this new industry. There's a lot of hype around the industry, and that's completely fine. I agree. I think crypto is amazing and has potential, blockchain, fintech, all these different things. Absolutely need to do your research on the financial health of a company, their business model, especially in crypto, before you invest into it, especially its native token. Because in a lot of ways, if the business model is non-functional, you are essentially investing in somewhat of a meme coin. All right, let's switch gears. Let's talk again about World Liberty Financial. There's been a lot of conversations around World Liberty Financial, and there's a lot of things that are still up in the air about this DeFi project. So this is a DeFi project that has the support of the Trump family. It is very specified in this that the Trump family is not managing it. They're not in charge of it. I like to say that they're basically saying that they're just supporters of the project. Although Trump's three sons are somewhat involved, not in the management, but just in the overall, function of the project, just kind of seeing like where the project will go and stuff. So I think support is the best way to reference it. And they own a lot of the tokens, but we will get into that shortly. Okay, so obviously we know the US dollar has been the base currency in the FX market for many, many years. It is still referenced to about 60% of countries globally, meaning that the US dollar has been pegged still to a lot of other different global currencies, other countries' currencies, etc. What World Liberty Financial is trying to do is they are trying to create the next level of the economy or the stock market, if you will, and start introducing stable coins. The biggest issue that we always talk about with Bitcoin, Ethereum, and a lot of other cryptocurrencies in the crypto market is price volatility. Because everything is backed by supply and demand for coins like Bitcoin and Ethereum, there is a lot of risk and uncertainty in regards to price swings and price fluctuations and when demand is high and when demand is low and what that price is looking like. So there's a lack of predictability, if you will, in the market with Bitcoin and Ethereum. Of course, there's so much more independence in regards to person-person transactions. You wouldn't need to use Cash App, PayPal, all these other, third parties that just get rich off of us for confirming that transactions happened. So to try to beat out this price fluctuation, this volatility, stable coins were introduced. And stable coins are crypto coins or cryptocurrencies that are backed by the US dollar or maybe even backed by gold or backed by some other financial instrument. The whole purpose of this is to try to introduce cryptocurrencies into the financial markets while also still having price stability or, legitimate dependence. So how we just talked about how, if this native coin doesn't have a business backing it that's legit and have a business model backing it, it's not going to be successful. In a similar way, we're talking about how a lot of cryptocurrencies might not have success because they're just backed on supply and demand compared to maybe a stable coin that is backed by the US dollar or something tangible, something like an asset that is proven to be trusted and regulated and reliable over time. I'm going to read you guys this statistic really quickly. So Trump family are supporters to the project and allocated approximately 22.5 billion WLFI tokens, so World Liberty Financial tokens, and a promise to receive fees for services provided to World Liberty Financial. What is so interesting about World Liberty Financial that we haven't talked about yet on this podcast, which is why I want to bring this back up, is that World Liberty Financial offers governance tokens. And if you don't know what governance tokens are, they're not like your typical, buy and sell token that you could potentially profit off of or exchange. Once you have a governance token, you cannot rebuy, sell, or trade it to anyone. It allows you to have a community vote. So in World Liberty Financial, in this whole project, if you purchase one of the tokens, you actually have a say in how the project runs, how it goes, how it will function, the principles, the policies, the future add-ons. You yourself, you the user, in a way, have the power to dictate the future. And this is so cool because a couple episodes ago, we were talking about this concept, but we were more so talking about it in dApps on Ethereum's blockchain. Now, with a governance token, you have the right to vote for World Liberty Financial, and you have somewhat of a say and a stake in where the project goes. It's really cool. They do it with a lot of dApps too. So on a lot of dApps, you, the user, run the dApp. So what is kind of happening here in a similar way is if you have a governance token, so if you purchased a WLFI token, so World Liberty Financial token, you have a say in the project overall. You get to send in a vote of what you want to pass, what you don't want to pass, what you think is cool, what you think should be implemented, etc. I love this idea of power to the community because for TikTok's organization runs the platform, or TikTok's company runs the platform, and YouTube's company and business and employees run the platform. But for World Liberty Financial, even though they may have people involved in the project, a lot of the users that have purchased the token and believe in the project have a say in where the project goes. So it's more power to the people, which is what crypto's been trying to do. We're trying to defeat all these top organizations or huge corporate greed companies and try to distribute more power to people instead, the average user, which is sort of in a lot of ways what governance tokens kind of do. Just this is a different case because we're getting involved in like politics and stuff like that. You can find World Liberty Financial's token on Ethereum's interface. So if you wanted to get involved, you could explore it potentially on Ethereum. And the supply of World Liberty Financial tokens is 100 billion. To switch gears also, since we were talking a little bit about Trump's family, I wanted to mention that Trump also launched his own meme coin called Trump. It launched in January of 2025, so this isn't urgent, front news. I'm sure a lot of you guys already knew this, but you can find it on Solana's blockchain. The supply for Trump coin is 100 million, and right now the price that it's at for one Trump coin is around $13. So again, though, this is labeled as a meme coin. So the skeptics, and I'm not saying that they're wrong for saying this, but a lot of skeptics say that the Trump coin, being a meme coin, in time is really only potentially benefiting Trump. There was also an initial coin offering involved in this. An initial coin offering is when a crypto startup or a meme startup or some sort of a cryptocurrency is being created and there's a lot of buzz around it. A lot of people can invest in it to help grow the project. And this is what happened with Trump's meme coin. So it's not for sure what is expected yet. If there's any additional information, I'm going to post it in the video. So make sure to check out the video because I'm going to make sure I didn't leave out anything for you guys in regards to the purpose behind this meme coin. But a lot of the skeptics are saying that it could just potentially benefit Trump, which could be true if you invest in this meme coin. And again, it's just supply and demand. And Trump is also only in office for about 4 years. So that's also another interesting take is like, okay, I'm going to be investing in this coin for Trump, but then 4 years from now, when he's no longer in office, what necessarily is this meme coin going to be used to or tied to, or what's its purpose? Is it behind a business? Or is it just behind Donald Trump himself and he's just promoting his presidency? Which in a way, a lot of skeptics have been saying that too, that the Trump meme coin is just a way to promote his presidency and the highs and lows of his presidency and his popularity and stuff like that. So based off the research that I've already done, that's pretty much what skeptics have said. And, what the media is saying is that this Trump meme coin launched and it's potentially just as a little giggle for Trump's presidency and where he's going to end up in 4 years. So do with that what you will. Check out the video for more information on that. All right, let's close out this podcast episode. I want to talk to you guys again about my trip from New York City. So when I was in New York, obviously, I'm in Massachusetts, so it takes us about 4.5 hours to get to New York City. We took a train, and on the train ride there, I've been reading a ton of books in regards to business to try to better myself, better the brand, better this company. And in doing so, I've been reading a marketing book that I'm gonna recommend to you guys. And it should be on the screen, so if you're viewing the screen, you can see it. But it is called Positioning: The Battle for Your Mind. What is so interesting about this book, which is gonna get into the company that we're gonna talk about in a minute, is that the United States of America is the #1 country in the globe in regards to mass advertisement, which means that we are consuming like 10 times more advertising every single day than any other country in the globe. That is so fascinating to me. Like, we don't realize that we are so over consumed. Like, we consume so much in regards to the business world and the marketing world and the advertisements that we see. And New York City is like a hotspot of advertisements. Obviously, if you go to Times Square, that's all you see. It's just billboards of advertisements and companies trying to sell you products and get their business out there. And the book is super cool because it talks about how, because we're in America and we're already so, the overconsumption is already at extreme levels, that it's that much harder to advertise and get your company out there. Not to derail us, but it was interesting. It was talking about marketing in the sense of, you need to go into your consumer's mind and find the advertisement there. And also, it just talked about, if you're at first mover's advantage, if you're at second mover's advantage, how can you win at a second mover advantage position and all that stuff. It was really fascinating. I 100% recommend, if you are starting a business or looking into marketing or advertising, that's like your interest for your career to help a company. Absolutely, you should read that book. I will list it again in iBooks under below in the description if you need, a direct link to it. But anyways, while I was in New York City and I'm watching all this mass advertisements, I saw a company called Grayscale. Now, you might have heard of Grayscale in the crypto industry. They originated in 2013, and in a lot of ways, they're pretty similar to what Fidelity is trying to do with crypto ETFs. They build crypto investment products. So they build ETFs, and we're going to be talking about a couple ETFs today that are important to invest in. But just like how Fidelity has the Bitcoin Wise crypto fund, for example, and then they have the Ethereum fund, these are both ETF models that you can invest in indirectly to kind of dip your toe into crypto without like diving nose deep and facing all the price volatility of actually owning the coins yourself or having ownership of Bitcoin and Ethereum yourself and taking that risk. Also, ETFs limit that risk of needing private keys, a digital wallet, and all, and getting, having ownership of your own crypto in another way. What is so cool is, in the last episode too, we were talking about how there are ETFs where you can invest into a bundle of companies, but specifically in certain industries. So Grayscale, and I followed my intuition to kind of introduce this to you guys. As soon as I started seeing their advertisements, I was just like, I feel like I should cover them. I'm glad that I did, because they have an ETF, which is called the Grayscale Bitcoin Miners ETF. And what it does is it tracks the market cap and growths of all these Bitcoin mining companies. Really interesting. We've talked again and again and again about Bitcoin mining, but we didn't talk about Bitcoin mining companies, which might be my next podcast episode, to be honest. I know I still want to cover mutual funds with you guys and stuff, but that might be what we talk about next, because Bitcoin mining obviously is essential in regards to the consensus mechanism and processing of transactions on Bitcoin. So it's interesting, we've never really talked about Bitcoin mining companies, but this ETF that Grayscale offers tracks the flow and the growth of these Bitcoin companies. And obviously, when Bitcoin is doing amazing, a lot of these mining companies are doing amazing because Bitcoin is so dependent on them. So Bitcoin's success is really these mining companies' success. I like Grayscale because first of all, they really specialize in crypto. Fidelity specializes in everything, but they're just starting to dip into crypto. Grayscale specifically invests a lot of their time into crypto and helping people asset manage crypto. If you're completely new to crypto, you don't know how things work, this company offers you complete guidance through that process and, indirect involvement. And obviously, Grayscale does have an ETF for Bitcoin. They do have an ETF for Ethereum. Now, it also has the Grayscale Bitcoin Adopters ETF, which has a global basket of publicly traded companies that have adopted Bitcoin as a part of their corporate treasury. And what this is that is a couple of companies that have purchased their own shares of Bitcoin, Ethereum, or other popular cryptocurrencies. One of the biggest companies that has already done this is Tesla. Tesla, Coinbase Global, if you've heard of Coinbase Global, and also Galaxy Digital Holdings are a few examples of companies that are investing their own corporate entity into Bitcoin and crypto shares, investing and having ownership of those shares. So there's actually an ETF where you can track and invest in companies who have invested in ownership of Bitcoin or Ethereum that Grayscale offers. I would say the biggest benefit of Grayscale is that it offers more variety. So if you are looking to invest into the crypto industry, like the companies that are in crypto, and even companies that aren't necessarily into the crypto industry but are into purchasing and owning crypto, then I would go with Grayscale. But if you're a little skeptical, you're a beginner, you're more traditional, you like things done in a more traditional way, I would recommend staying with Fidelity. Personally, Grayscale originated in 2013, so it's been out there now for about 12 years. Still a little new, in my opinion, in regards to trusting a company to invest your assets. But obviously, if you're getting involved in ETFs, it's a lot safer. So I would say that if you're looking for more variety, you should go with Grayscale. If you're looking for just a little dip of your toe into the crypto market and also just either Bitcoin or Ethereum, then you should go with Fidelity. I only listed a few of the portfolio options or the ETF options for Grayscale, but there are a ton more that they offer. I just wanted to give you the ones that really stood out to me that I thought were interesting. I'm going to link Grayscale below so you can check that out individually as well if you want to see what they're about in their company. Overall, I give them a pretty good review. It looks interesting. Obviously, I've never invested in them, so I can't give you guys any financial advice or, my own opinion or my own experience with them. But I will say that it's very interesting and worth looking into. Thank you guys so much for watching. Again, another successful podcast episode. And obviously, as I've told you guys over the last couple weeks, we have a lot of updates coming. And I know I keep saying that, but they are coming shortly. We are orchestrating everything behind the scenes for this summer. I'm very excited. And once the weather gets nice, because it's just been raining every single day here in Massachusetts, which is good for the community garden because then me and Dylan don't necessarily have to go there and water it and the maintenance is a lot lower. But in regards to, actually getting out there and doing interviews, we have to wait until it's the right time to do so, which is coming very soon. Again, thank you guys for watching. Stay tuned for next week. We should be we can be potentially covering some Bitcoin mining companies after talking today. But nevertheless, I will see you guys next week, next Monday. This is Cryptic Humility. My name is Vanessa Hurley. Thank you.